Hello and welcome to NTIQ TAP, helping you meet your CPD requirements. Welcome to this latest episode of NTIQ TAP. This one is on a topic we've looked at before. I'm sure you're well aware of. You may well have seen, given whether you're FCA registered or not, may well have seen their latest guidance on vulnerability. It's a pretty hefty document, so we've tried to digest it for you. I think it's 58 pages or something like that. We've tried to get the salient points out for you, some of which have been covered, time and time again. They're just really emphasizing a lot of these points, and we've tried to do that ourselves so that more and more people are aware, of course, of what is a really important area of personal insolvency and debt advice at the moment. So this is our sort of summary, if you like, of the FCA guidance on vulnerability that came out a couple of weeks ago now. They provide guidance for firms on the fair treatment of vulnerable customers or consumers. The term is interchangeable throughout this guidance. So let's have a look at what they've said. In terms of vulnerability, generally, as a bit of an intro, we all know, I think, that a vulnerable customer or consumer is one who, due to their personal circumstances, is especially susceptible to harm, particularly when a firm is not acting with appropriate levels of care. The FCA says they want vulnerable consumers to experience outcomes as good as those for other consumers and to receive fair treatment across the firms and sectors regulated by them. By the FCA, of course, not by the consumers. There is a general principle that consumers should take responsibility for their own choices and decisions. Vulnerable consumers might have factors that limit their ability to do that, of course. They can have additional or very different needs to a non-vulnerable consumer. They may be at greater risk of harm, particularly if things go wrong. And the FCA expects firms to provide their customers with a level of care that is appropriate given the customer's own characteristics. So the fair treatment of vulnerable consumers should be embedded as part of a healthy culture throughout firms, as well as in their policies and procedures, say the FCA. Firm senior leaders should create and maintain a culture that enables and supports staff to take responsibility for reducing the potential for harm to vulnerable customers. Commitment should come from the top, ideally, and there should be a culture of feedback and learning from the front line, as they call it. The FCA guidance is issued under Section 139A of the Financial Services and Markets Act 2000 as guidance on their principles for businesses, which you're no doubt familiar with. So they say that in order to achieve good outcomes for vulnerable customers, firms should do the following things: understand the needs of their target market or their customer base, ensure that their staff have the right skills and capability to recognise and respond to the needs of vulnerable customers, to respond to customer needs throughout product design, flexible customer service provision and communications, and to monitor and assess whether they are meeting and responding to the needs of customers with characteristics of vulnerability and make improvements where that is not happening. So we then move on to monitoring firms' treatment. Now, the FCA, as you no doubt know, supervise and enforce against the standards set by their FCA principles, as well as their rules. And they include in their mission that understanding user needs and recognizing where some users may be vulnerable is a key factor in the way they make regulatory judgments. Firms can be expected to be asked to demonstrate how their business model, the actions that they've taken, and their culture ensure the fair treatment of all customers, including those who are vulnerable. The FCA considers business models and culture as the key drivers of harm in firms. Those include the firm's purpose as understood by its employees. Is that to make money or is it to help people with their debt or whatever it may be? The attitude, behavior, competence, and compliance of the firm's leadership, The firm's approach to managing and rewarding people, such as staff competence and incentives, and the firm's governance arrangements, controls, and key processes, such as for whistleblowing or complaint handling. Firms should be able to provide the FCA with the information they are using to monitor whether they are achieving outcomes for consumers with characteristics of vulnerability when compared to other consumers. The supervision of the treatment of vulnerable consumers will be integrated into their supervision. It is not and should not be a one-off event. The FCA say that they will seek to understand consumers' experiences of their treatment, for example, whether they are experiencing difficulties effectively engaging with firms and in assessing appropriate products. They will do this through market research and engagement with their consumer network. This guidance, i.e. the one we're summarising, may also be relevant to an enforcement case. For example, the FCA may use the guidance and supporting materials to help them assess whether it could reasonably have been understood or predicted at the time that the conduct in question fell below the standards the principles require. The factors that inform their supervision of firms' treatment of vulnerable consumers, as outlined above, are also relevant to enforcement. Okay, so look out for that when you're possibly expecting a review from the FCA, or you've got some feedback forms and compliance forms and what have you going on. So, understanding vulnerable consumers' needs. How can we do that? Well, I'm pretty sure we've discussed it before. You may well have been, sort of trained on it before by us or by someone else. The needs of vulnerable consumers in a firm's target market or customer base are likely to vary, as you no doubt know, and it will often require additional measures to ensure good outcomes for those customers. It's important for all firms to understand the needs of vulnerable customers in their target market or customer base, as we said at the top of this webcast. This includes firms that offer self-service digital channels or are part of a distribution chain and so do not directly interact with customers. If firms don't do this, they may not be able to ensure their staff have the right skills and capability to take appropriate practical action. This could result in gaps in the provision of services and products that lead to poor outcomes for vulnerable consumers. So vulnerability refers to customers who are susceptible to harm due to their personal circumstances, as I think we know really. Firms should think about vulnerability as a spectrum of risk. All customers are at risk of becoming vulnerable. This risk is increased by characteristics of vulnerability related to 4 key drivers. Health, so health conditions or illnesses that can affect their ability to carry out day-to-day tasks. Life events such as bereavement, job loss, or relationship breakdown. Resilience, low ability to withstand financial or emotional shocks. And capability, low knowledge of financial matters or low confidence in managing money, i.e. financial capability, or low capability in other relevant areas such as literacy or digital skills. In February 2020, the FCA's Financial Lives 2020 survey, which we summarised, I think, found that 46% of UK adults, so 24.1 million people, had characteristics of vulnerability. By October 2020, the FCA's COVID-19 panel survey indicated that this had increased to 53%, which is pretty significant in 8 months, isn't it? So not all customers with characteristics of vulnerability will be vulnerable, but they may be more likely to have additional or different needs, which, if not met by firms, could limit their ability to make decisions or to represent their own interests. Consumers may not want the label vulnerable applied to them, of course. There is at least a perceived stigma to that. The FCA has provided a table of characteristics associated with the 4 drivers of vulnerability, and we've recreated that, but not in a table. So these are the 4 drivers: health, life events, resilience, and capability. So in terms of health, it could be a physical disability. It could be a severe or long-term illness, maybe a chronic condition. It could be a hearing or visual impairment. It could be a mental health condition or a mental health disability of some sort. It could involve addiction, substance abuse. It could involve low mental capacity or cognitive disability, perhaps special educational needs or learning difficulties, whatever it may be. In terms of life events, it could be retirement, could be bereavement, or an income shock, such as being made redundant. Could be a relationship breakdown, could be domestic abuse, and you've no doubt heard throughout the COVID-19 pandemic of increased instances of people seeking help for domestic abuse or cases of domestic abuse. So probably a big driver at the moment. And that also includes economic control. It's not just physical abuse. It could be sort of financial abuse of one party in the relationship preventing the other from accessing money or financial products, perhaps. Care responsibilities can also be a significant life event that can cause vulnerability. And other circumstances such as leaving care, migration, asylum, human trafficking, modern slavery, and of course, convictions. In terms of resilience, it could be inadequate or erratic income. Over-indebtedness can also be a driver of vulnerability, just being in debt. Having low savings or having low emotional resilience. In terms of capability, low knowledge or confidence in managing finances, poor literacy or numeracy skills, and also poor English language skills. English may not be their first language, for instance, or poor or non-existent digital skills. So perhaps the inability to use online banking, for instance. And no or low access to help or support. Okay, so those are your 4 drivers. We thought that would be better in a mind map rather than a table, just to give you an idea of all the different things. Okay, and that is not exhaustive, but it gives you an idea of the sorts of things that that can make people vulnerable and potentially cause detriment to them. Okay, so the first thing, really, the big section of this report is understanding vulnerable consumers' needs. So firms should understand that characteristics of vulnerability are likely to be complex and overlapping potentially. For example, a life event such as a relationship breakdown or a bereavement could lead to further vulnerability, such as mental ill health or low resilience. Firms should understand what characteristics of vulnerability are likely to be present in their target market or customer base. For example, firms that advise on investments and pensions are likely to have an older customer base. So common characteristics of vulnerability may involve health and life events associated with old age. A firm selling high-cost credit may have a customer base that has common characteristics of vulnerability caused by a lack of financial resilience, such as inadequate or erratic income. Characteristics such as bereavement and relationship breakdown will be present in all sectors of society. Firms should understand how vulnerability can be perpetuated or worsened by their own action or inaction. If a consumer loses their job, for example, it's not and is not offered appropriate forbearance measures on their mortgage, that could lead to greater stress and anxiety. In turn, that could lead to the customer taking actions that may create more harm, such as borrowing from higher cost sources in an attempt to address the payment shortfall. Firms should also understand how vulnerable consumers may be more likely to be susceptible to behavioral biases. Firms should know how those biases may present themselves so that they understand where there may be a risk of inappropriate exploiting those biases when engaging with those customers. Some of the behavioral and personal consequences of vulnerability for consumers include heightened stress levels due to difficult or different personal circumstances, increasing time pressures due to additional responsibilities. I think a vast proportion of the population had those at some stage over the pandemic, haven't they? Increasing preoccupation, i.e. the brain is elsewhere, limiting their ability to manage processing power and ability, decreasing due to competing pressures, for example, due to the side effects or emotional toll of receiving medical treatment. A lack of perspective, especially when experiencing something for the first time, not fully understanding the broader implications, being unable to make comparisons or see the bigger picture. Changing attitudes towards taking risks. People often become more reckless and or careless when under stress. So these consequences may affect the way vulnerable consumers engage with providers and may negatively affect their decision making. Customers with characteristics of vulnerability may be more likely to make poor decisions about buying and using financial services, exacerbating financial difficulties. The decision-making of consumers with characteristics of vulnerability may also be worsened by information asymmetry. This happens, for example, where they have less information about the firm, product, or service because they are less able to access or process relevant information to make an informed decision. The impact of characteristics of vulnerability and behavioral biases could be made worse by firms' behavior or business decisions. The nature of financial services may also have a negative impact, and products and services are often complicated and can involve entering into extended commitments. So vulnerable consumers are often more likely to be unbanked and less likely than average to hold any form of savings, insurance or protection, pension or investments for the future. Research from the Extra Costs Commission has shown that 3 million people with disabilities have been turned down or charged more for their insurance. Citizens Advice found that only 1 in 3 people with severe mental health problems have home insurance or a savings account. Some characteristics of vulnerability may make it difficult for consumers to use a particular communication channel. For example, a physical disability may make it difficult for a consumer to access a physical branch of a bank, for instance. Consumers who show characteristics of vulnerability may find it difficult to engage with markets and search for products and services effectively. As a result, vulnerable consumers may be more likely to pay a higher price than other consumers because they don't switch. They may also go without products and services. Consumers with characteristics of vulnerability may be less likely to understand how to manage their use of a product or service on an ongoing basis. People whose mental health has affected their social cognition are often reluctant to bring problems to their provider's attention. Vulnerable consumers are more likely to fall behind on key household bills or credit commitments. The Money and Mental Health Policy Institute have reported that nearly half of all consumers in problem debt also have a mental health problem of some sort. They are also more likely to have mistakenly bought an inappropriate product or service because they misunderstood the features or the terms and conditions of that product. Consumers with some characteristics of vulnerability may be more likely to fall victim to scams, including misleading online financial promotions. For example, the elderly, if they don't understand the product or they're just not sure, maybe they haven't taken any advice. Although some consumers may display characteristics of vulnerability and be at greater risk of harm, this does not mean that they will suffer harm, particularly if firms act with appropriate levels of care. And that is something that the FCA, of course, are keen on throughout this guidance. We then move on to the skills and capability of staff. So it's important for firms to recognise the role that staff play in meeting the needs of vulnerable consumers, amongst all consumers, really. These consumers are more likely to suffer harm when staff don't understand how vulnerability is relevant to their role, or if frontline staff don't have the skills and capability to recognise and respond to their needs. Staff at all levels, from the frontline to management and back office staff, can influence outcomes for vulnerable consumers. All relevant staff should have the appropriate skills and capability, as well as support from the systems and processes to understand and take into account the needs of vulnerable consumers in their work. Firms should ensure that all relevant staff understand the potential needs from their target market's vulnerabilities and what this may mean in practice for their role. For example, staff should understand that a consumer with a mental health condition or disability may be more likely to fall into debt and that debt can worsen a consumer's mental health. So it could be a sort of vicious cycle, if you like. If a consumer with a mental health condition or disability becomes indebted and a firm's staff understand how to make the consumer vulnerable, they will have a better understanding of the support and assistance the consumer may need. Another example is domestic abuse. Staff should be aware that this is widespread, particularly at the moment, with both immediate and long-term impacts on victims and survivors across all drivers of vulnerability. Staff should be aware that perpetrators of abuse can use financial services in their abuse and recognise how to safely provide victims with the support they need. Firms should ensure that staff have the skills and capabilities to recognise vulnerability and respond appropriately to individual consumers' needs so that they can treat them fairly. Staff should be capable of recognising and responding to needs. Where the consumer has told the firm about a need, where there are clear indicators of vulnerability, or where there is relevant information noted on the consumer's file that indicates an additional need or vulnerability. It should be possible to exercise additional care to adapt to the consumer's needs and be able to exercise judgment on when it's necessary to do so. Staff should be able to respond to the consumer's needs promptly so that action is taken to ensure harm does not occur or become more severe. Adapting to consumers' needs may mean referring to them to a colleague or specialist team that is able to help. Staff should encourage disclosure when they see clear indicators of vulnerability, but are not expected to go further to proactively identify vulnerability. Staff should seek additional support where necessary and be able to identify that need. Harm can arise because frontline staff are not aware of existing policies. Firms may have high-level policies in a number of areas, but there is a clear risk to vulnerable consumers if frontline staff don't have the right knowledge or experience to implement these effectively. This is referred to by the FCA as the policy practice gap. So how can firms put this into practice? Well, they can do these 6 things. Sharing relevant briefings or training materials created by charities, trade, or professional bodies with staff. Secondly, updating staff training to ensure it gives staff an understanding of vulnerability and skills relevant to their role. Thirdly, giving staff opportunities to share knowledge and experiences with other colleagues to help improve the level of support and increase understanding of how to take into account vulnerable consumers when performing their duties. Fourthly, appointing dedicated vulnerability champions or teams who can help discuss complex cases and offer support to frontline staff. It could be helpful to have vulnerability champions with expertise in different types of vulnerability, perhaps one who's more specialist in mental health problems, for instance. Fifthly, to develop how-to guides and knowledge bases on vulnerability that frontline staff can use in their day-to-day role. For example, a signposting document to additional information or support, or collection of best practice examples. Firms undertaking transformation programs or changes to their operations might consider a lead representing the interests of vulnerable consumers and considering how changes may affect their customer base. Signs and phrases to actively look out for when engaging with customers are as follows. So changes in payment behavior, such as payments stopping suddenly, late or missed payments, regular unarranged overdrafts and charges, unusual activity on an account. Staff should also be on the lookout for shortness of breath or signs of agitation, asking for repetition, a sign that the customer is not retaining information, or maybe that they're not paying attention in some way as a minimum. Signs that the customer has not understood, or there are some signs of confusion, or any mention of medication, perhaps. Phrases such as, I can't pay, I'm having trouble paying, mention of needing a breathing space or a debt moratorium, or contacting a debt advisor, that they can't read their bill, they can't understand the letter you've sent them, I can't hold on all day, I hate these press buttons, So you can probably think of some good examples maybe of when you've had those in practice, or of course what types of vulnerability those could be, of course. So the steps firms should take to seek information will depend on the type of interaction, the consumer, and the type of service provided. For example, if a consumer has briefly mentioned something that could indicate vulnerability, then staff should be proactive in following this up. Knowing how to record and access information about consumers will enable firms to meet their needs promptly, consistently, and fairly. If staff do not record and access this information, customer service and communications may not meet customer needs. For example, if a customer with a sight impairment requests a document in large print and this is provided, but that need is not recorded or accessed by staff in the future, they may send the customer important communications that they can't read, which could lead the customer to experiencing harm. Staff should be able to recognize when information about a consumer's needs is relevant to future interactions and how to record it. They should also know how to access and use previously recorded relevant information to prompt meeting that consumer's needs. They can do that by using what's called the Texas model, which we'll go through in a second, which was developed by the Money Advice Trust and the Money Advice Liaison Group, MALG, in relation to debt collection and mental health. So Texas stands for thank. So thank the customer for their disclosure. Explain how their disclosed information will be used. X is for explicit consent, or checks. I know. Explicit consent must be sought, or checks with an X, made to ascertain if the customer objects to data processing. Ask the customer questions to find out key information to understand the situation better. And then signpost is S. So signpost to internal support or external services with specialized expertise where appropriate. So T for thank, E for explain, X for checks or explicit consent, A for ask, and S for signpost. So frontline staff may come across challenging situations, and firms should offer practical and emotional support to staff where appropriate. This may take the form of offering self-help information, time out following difficult or challenging phone calls, or time for staff to share experiences in face-to-face meetings or via online forums. Large firms may offer an employee assistance service or maybe counselling if necessary. By supporting and improving staff members' mental and emotional resilience, firms can help their frontline staff engage with vulnerable customers more sensitively. We then move on to taking practical action. And you can combine this with what's coming up is as we always do on NTIQ TAP, of what this means for you. But a lot of this is in a bit more detail, and we've then summarized the key messages in a moment. So firms should turn their understanding of vulnerable consumers in their target market or customer base into practical action to meet their needs. If firms' products and services do not take into account the needs of vulnerable consumers in their target market and customer base, there is a risk that these customers can suffer harm as their needs may not be met from the start. Some products and services can have inherent features that may be harmful to some vulnerable customers. For example, if they're complex, they may be more difficult to understand, whether you're vulnerable or not. If a firm's business model intentionally exploits vulnerable customers, that would be a clear breach of the FCA's principles, of course. Harm could be unintentional. Standard services with little flexibility can prevent customers from engaging with or using them. For example, automated helplines with no clear exit routes can be difficult for some. I think we've all experienced that, whether we're vulnerable or not, haven't we? Stuck in, well, none of these options seem to help me, so I'll just go for 5 or press star. We've all had that, right? Vulnerable consumers are more likely to have different service needs, as you can imagine, and as we've discussed before. So, for example, they may find some channels of communication more challenging or stressful, or need time to understand information and make decisions. Firms should be proactive in offering support. Try and recognise the needs of consumers, whatever channel they use. Vulnerability is often temporary and can happen at different times in a consumer's life or at different stages in the product or the service life cycle. Firms should proactively tell consumers about the options of help and support they offer to meet the needs of vulnerable consumers. Firms should consider how to meet the needs of consumers who need a third party to access their account or to support them on a short to medium term basis, whether that is through a chaperone at face-to-face meetings, or maybe they need a power of attorney, perhaps on the other sort of side of things. Even with inclusive design, some vulnerable consumers will have complex needs or be in situations that will be difficult for firms to address within their standard processes. Standard contracts can be inflexible and often don't have easy options to vary or change them in response to changes in circumstances. Firms should advise vulnerable and other customers to seek advice before making a decision. In some circumstances, a firm may decide it would be prudent for customers with temporary vulnerability to have extra time before they make a decision. This might be because the customer lacks the capability to make a decision at that point in time, or is faced with an unexpected or complex decision. Firms may want to consider creating products or services specifically for vulnerable consumers, or perhaps specific features of those products or services. Consider what distribution channels are suitable for the target market. Is telephone or digital more appropriate? Consider how to launch the product so that vulnerable consumers are aware of it, however you may do that. Review products and services to ensure they still meet vulnerable customers' needs. In terms of monitoring, firms should monitor the actions they are taking to ensure they treat vulnerable consumers fairly and the outcomes they experience compared to non-vulnerable consumers. This will enable firms to assess which activities and processes work well and which need to be adapted to improve the outcomes for vulnerable consumers compared to other consumers. For example, this will be an ongoing process. For other firms, it might be a regular review. Lack of effective quality assurance may result in firms failing to spot the needs of vulnerable consumers and changing those products and services as a result. So we've covered the real key areas of the guidance here, and we've gone into detail where appropriate. But as we always do with NTIQ TAP, what does this mean for you? Maybe as a provider of advice in whatever sphere of personal insolvency or debt that may be. So consider whether products meet the needs of vulnerable consumers, assess those needs, monitor and record information relating to vulnerability, whether that is actual or potential, and of course, make sure that that information is accessed. As we said, if someone's got a sight impairment, make sure that that is recorded so that they always get printed information in large print or braille or audio. However, they're not sent something in tiny font that they can't read, and then you're not causing them more harm. That sort of thing. Have clear and communicated policies in place across the organization, not just from the top. That must go all the way through, from frontline staff to management to back office staff. Consider whether communication channels are appropriate. Offering a web chat is probably no good for an elderly customer, for instance. Are they digitally savvy or digitally skilled? Consider that. So hopefully that's been a useful update and a useful summary for you of the FCA vulnerability guidance. Obviously, vulnerability is something that we cover regularly and we have covered in the past, but I think this is a really good summary from the FCA. So we wanted to share and summarize it for you to save you the trouble of wading through what was a pretty hefty document from the FCA, I have to admit. We'll look forward to seeing you next time. Of course, if there's anything else you would like to see covered on NTIQ TAP, then please drop me an email. It's ad@nti.co.uk, or you can check out our other products and services, of course, on nti.co.uk. And I look forward to very much seeing you next time. Thanks very much. Thanks for listening. Thanks for watching. And that's all from me. Goodbye.